So with the end of financial year just around the corner, I thought I'd get my friend Genevieve from KMP to come and have a chat about all things tax and all things end of financial year. So Genevieve, with end of financial year just around the corner, what should people be doing to get ready for the end of financial year?
I think the first starting point is just to gather your information and just review your financial affairs that you have. And so maybe starting point is getting a summary of your income and expenses, which is basically showing you the net profit of the year. A lot of times we don't even know what we've made for the year, so it's good for you to sort of pat yourself on the back to seeing what a great year you had. Maybe some bank statements, gathering all that, your donations for the year, some work-related deductions, keeping all your receipts, and also a summary of the assets that you own and any debts that you owe.
So that's a range of paperwork. So what is the best way to store all of that documentation? I
think we've found that traditionally we used to get a shoebox, but that's now changing now that everything's online. And I think, you know, taxpayers are becoming more sophisticated by using online software, but you could use things like Google Docs or OneDrive to store your information. I think the classic example that I have is when you make a donation, usually you'll get an email receipt or anything that you tend to do, even if you pay your subscription to a membership, they'll send you an email receipt. Just store that in a folder and, you know, label it tax and then share a link at the end of the year to your accountant. And I think it just makes things easy for them and also for substantiation purposes when the ATO do come knocking on your door. And hopefully they don't. But
so what are the commonly missed deductions that people should be thinking about?
I think there's a few, and it obviously comes down to what you do, but some general ones are home office. Now we're finding that clients are using their home for their place of work, and it isn't often a tricky one, but where you do use it, you can claim things like the running expenses and keeping an account of your phone, your internet, and just keeping a diary of at least the number of hours that you spent using your study. But it is a tricky one, so just make sure you check with the accountant some of the expenses you can claim, but other expenses like work-related deductions that aren't reimbursed from your employer, things like you've got your subscriptions, your income protection insurance, any depreciation for assets that you've used within the business, and donations. Number one, especially given this time of year, we're all getting invited to gala dinners and auction events, but just be careful with things like the donations, just because if you do get something back, you can't actually claim it, and making sure that you're donating to registered charities.
What should small business owners specifically be thinking about?
I think the number one thing is just making sure, like, because I think a lot of our clients, they start off being sole traders. They start off with an idea that starts off probably like a hobby, as you've seen, and then they've suddenly grown all too fast, and just reviewing whether that structure is now still suitable for them now that they've grown. They're probably selling their products overseas. The sole trade is still the best structure for them. So it's just having a chat with their accountant and just making sure they're reviewing what they've done and seeing where they want to head to in the future. And also just being careful of other things that can trip you up. Things like GSTs are number one. When we start off, we don't really hit the threshold level, and then soon, next thing you know, you've hit the $75,000 threshold that requires you to register for GST. So being aware of that, because suddenly your income's like cut short of the 10% that you thought you had.
With end of financial year being your grand final, the time of the year
is.
you get the most excited, are there any things you wish people wouldn't do that would make your life a whole lot easier?
It's always hard to undo things. So I think before you ever enter into a contract, purchase anything, or make that large donation to a charity, always best to just check with the accountant, you know, is that right? But the other thing is, I think clients tend not to plan for their tax. A lot of times these clients have come from traditional salary wage earners and traditional jobs where they never had to account for tax, and next thing you know, they're earning large sums of money and the tax is not taken care of until the end of the year. So you want to make sure you've got enough cash for the tax and planning for that. You don't ever want to get the call when I have to call you up and tell you you've got this large $80,000 tax bill and you're going, oh my God, how am I going to actually fund that? So it's always best to sort of plan ahead. And that's something we do with our clients. We sort of forecast 12 months in advance and come up with a plan of some of their lodgement dates and also some upcoming tax payments that they'll need to make. So it's sort of cash flow is, I guess, forefront of the entrepreneur's mind.
I've said this to you many a time. It's incredibly important that if you are not comfortable to refer your accountant on to your very best friend, then why are you putting up that standard? So you and the KMP team are fantastic. It's such a pleasure to work with you, and thank you so much for coming and sharing these tips with us today.
No, thank you, Caroline, for having me.